Would you say we're in a housing bubble?
I believe that many parts of Texas have been in a housing bubble since the start of the pandemic. Right now, I think the economy is weaker and the housing market is significantly weaker than what current data is showing. And part of that has to do with the lag. What we're in right now is the worst housing market that Texas has seen in the 21st century.
What would you say you're up since 2019?
Oh, gosh. I mean, in many parts of Dallas, over 100%.
Doubled. That's scary.
And the cost of everything is so much higher because of the inflation. So your laborers cost more, your materials cost more. What I've seen happen is we are building lower quality homes now. These are builder grade, cheap finishes. All throughout history, we used to be innovative. We built better things. To me, for the first time in American history on large scale, we are regressing. To me, it represents a downgrade in America. And I think the distinction is that home builders used to serve customers. Now they serve shareholders.
Amy, thanks so much for meeting me in near your hometown of Frisco, Texas.
Glad to be here, and thank you for coming out here and accommodating my schedule.
Yeah, so you're a macro and housing analyst, macroeconomic analyst. So I'm kind of curious, just want to dive in a little bit. For those that maybe don't know what that means, what do you do?
It's economic analysis of primarily housing is my focus. And a lot of that is just because housing's been the most interesting part of the economy, in my opinion, since 2020. We've been in a pretty unprecedented housing boom. And so it's a huge part of the economy. Housing is a significant portion of GDP. So I think if you're going to be focused on the macroeconomy, you can't ignore this giant housing piece.
I've heard various percentages, but they say about 35% of GDP is housing and related services. So that's a big number. So when we have booms and busts in the housing market, it certainly affects now not just the U.S. economy, but globally. Kind of give us some background on your career path. I mean, what made you so interested in, one, being an analyst? And because I think of that as being a lot of research, and it's very hard to get great information too, as you are
indeed.
Well aware. Yeah. By design, maybe. But just give us the background. So what sent you on this path?
So my background actually is in media and marketing. My first job out of college was actually, I was working in production at Fox News Channel. And that was a pretty short-lived stint. That was a tricky era for young women in that business at the time. So I went from there into writing, written journalism and media. I wrote for some blogs. I actually wrote for the Huffington Post for a while, which is kind of a opposite end of the spectrum, going from Fox News to Huffington Post. But my career was primarily, I was journalism focused, and marketing was sort of paying the bills. Marketing jobs were, my day job, and I was blogging and writing on the side. And then I got married and had my kids, and I wanted to stay home. I had always wanted to be a stay-at-home mom. I had 3 kids, boom, boom, boom in a row. And then right before the pandemic, my husband was transferred to a job in Texas, and we came down here. And it was right at the time my kids were getting to that age where they were all starting school. And I was thinking about going back to work, what kind of things I would do for a career. And it just so happened that we arrived during probably the craziest housing boom that Texas has ever seen, certainly that Dallas has ever seen. And because I have that journalism background, it just sparked my attention. And I was fascinated. I was reading, studying things all night long, even though it wasn't, my official background wasn't housing research. It became just an incredible interest to me because of what was going on. To me, that was the story. And I didn't feel like the mainstream media was picking up on it at the time. Back in 2021, my husband and I were actually bidding on homes in Dallas. And at the time, the official CPI data was still reading, I think it was still right below 2%. I mean, there was no flags of inflation in the economy. The first house that we offered on in Dallas exurbs, there were 16 offers, and it sold for 20% over list price. So it was shocking to us that, home prices are rising, 10%, 20% a month. And the CPI data is showing normal levels of inflation. It was mind-blowing to me, the disconnect between what the data was and what was happening.
I could go on to say that there's an even bigger disconnect between the ones running the show and the reality. But there's a lot to unpack today. I want to dive into so much that is very interesting. And you're right. As a real estate broker, I watched it happen. And we went from standing room only to touching elbows in open houses to where people were buying homes without even seeing them. And they were putting crazy prices, which we'll talk about, but the investors were competing with these home buyers and jacking the price up even more. And for the first time, I've been in the housing market serving the housing market in one way or another since 1989, a long time. It was the only time I ever witnessed escalation clauses where you were seeing on a $500,000 home, $150,000 over appraised value clauses that were being placed. The appraisers couldn't keep up. It was an enormous amount of exuberance. And I think one of the biggest disservices that we witnessed were the parents giving these first-time home buyers the cash above the appraised value to even close on the loan. So what a mess. So now with everything that you study, and I've watched you on Fox Business, you're a pretty regular contributor there, and they kind of lean on you, and you go in a lot of different directions, all housing related. What is your overall opinion of the U.S. economy?
Right now, I think the economy is weaker than any official data is showing. And the housing market, in particular, the housing market in some of these Sunbelt regions like Dallas, is significantly weaker than what current data is showing. And part of that has to do with the lag effect just of the rate hikes. This is a rate-sensitive sector, and those rate hikes they can have up to 12 to 18-month lags. So there's a lag before it even impacts the sector. And then there's an additional 3 to 6 month lag before the data gets picked up in anything like an official Case-Shiller home price index. So the story that you'll see in the headlines today about, I think nationally, they're saying home prices are still at all-time highs. In certain Sunbelt markets, they're starting to concede that there's been price drops from that 2022 peak. But you have to understand that some of these homes in the Dallas market right now have been listed since March. They've been on the market for 7, 8, 9 months. They've cut their price maybe 10, 15%. There's no buyer. There's no price discovery, and we don't know where the bottom is. So until that sells, it's not going to be recorded in any data.
With the data that you are looking at, and this is, always, we hear headline news talking about, just like you said, the home prices are still at all-time highs. But the way that they collect that data is based on home sales. And that's really skewed because a lot of the buyers have been cash and they're buying the more expensive homes. So when you're comparing median price in America to a 40 or 50-year sales low, and we haven't seen sales this low over the last 12, 18 months in 40 or 50 years. So what do you think about them spreading that news that prices are still high when it's skewed based on the buyer?
I mean, they're painting a very rosy picture because, housing's priced at the margin. And right now, the marginal sales that are going through are, like you said, the cash offers, the people that can still afford homes at these prices and interest rates, which are fewer and fewer, which is why the volumes are so low. But you just have to go back and look at, like you said, you have to look at the sales volumes. You have to look at the transactions, that are happening are so few. You have to look at what's not happening. All the homes that are not selling, they're either being pulled off the market with hopes of relisting in the spring at lower rates that I do not think are going to deliver like people expect, which doesn't mean I'm not saying I don't think rates are going to drop. I'm saying I don't think they're going to drop like below 5 or to a point that will stimulate a lot of demand and do so in an economy that has increasing unemployment, which we also do have as well. So Yeah, I think it's uglier under the hood than any of the official data is picking up on right now.
Would you say we're in a housing bubble?
I believe that Dallas and many parts of Texas have been in a housing bubble since the start of the pandemic. And I define that by, number one, speculation. There was an enormous amount of speculation. Like you were saying earlier, I was at open houses. There were 30, 40 people. There were people on FaceTime with real estate agents, foreigners, didn't speak any English. Show me house. I put in sight unseen buying, foreign money pouring in, cash offers. Anybody who lives in the Dallas region can affirm this, that if you owned a home during 2021, you were getting mailers every week from Redfin, from Open Door. This is what we'll buy your home for this. We'll give you a cash offer. We can close right away. There was an enormous speculative demand for housing. And it was based on some fundamental things that were correct. Like the migration during the pandemic was real. We did have California tech salaries coming to buy Texas-priced homes. And remote work was new. And that was, or not new, but it was really picking up steam. Those were real factors. And that was combined with a serious slowdown in construction because there were labor shortages and there were material shortages. So there was a supply and demand imbalance, and speculators were all over it. I mean, they wanted to take advantage of it. And that, I think, is sort of like the definition of a boom. And I do want to take a moment to clarify that this did not happen in Texas in the 2005 housing bubble to the same extreme. And this might actually sound a little bit like hyperbole, but it's not. What we're in right now is the worst housing market that Texas has seen in the 21st century. A lot of people aren't going to believe that because they're going to say, what about the Great Financial Crisis? Do you know how much home prices fell in Texas during the Great Financial Crisis? No. From top to bottom, so like from 2006 to 2011, 10%.
Okay. So lower than the national.
10%, 30% nationally. Places in the Sunbelt like Vegas, 55%.
Right. Vegas was devastated.
Florida, over 50%. Phoenix, 50%. That's what people remember about pain in the Sunbelt. Texas had stricter underwriting standards and almost no speculation because of that during that period. So we did not have a significant housing repricing. And today, home prices in Texas have fallen 7.5% from 2022. That's the Redfin data I just pulled this morning.
Okay. So
we are already down 7.5%.
So what would you say you're up since 2019?
Oh, gosh. In many parts of Dallas, over 100%.
So doubled in 5 years.
Doubled, yes. In the exurbs, in the boom growth areas, they have doubled. And probably on average, I would say probably the official stat you would get would be like 40 to 50%.
That's scary because as someone that went through, was a builder and contractor in the GFC, and I was all speculation. So I didn't do any custom builds. It was, from really 1997 to 2008, 2009, all the way up to 2016, I've been a spec builder. And nationally, when we saw the price crash in housing, and we're in Maryland, so we're in probably one of the most insulated areas, but we were hit the hardest. It took until the high of 2022 for a lot of buyers in the $1 million price range to even realize the price they paid in 2006. So that's how long it took for the market to rebound. But if you look on a national average in 2008, prices dropped to 2003 levels.
Yes.
So that's, if it were to happen now here in Texas, from what you're saying, this Dallas area, that would mean that prices would be cut in half if it went back 5 years. If we had something like that, we have learned a lot. I guess the Fed has learned a lot in how to prevent things from happening, but there's implications which I want to dive into with you as a result. But do you believe that we could see, just said that demand's dropped off. We know that builders have been offering 5.5% interest rates for 18 months. We know that new home builders had the worst October on record a year ago, right? In 2023, they reported the worst October on record. You see a crash coming?
I see it as a price correction coming. And the only areas that I see that dramatic repricing scenario that you just named would be areas like the exurbs, sort of like where we are now, where there has been a significant amount of new construction. And the reason why is because we had these demand pieces come into play during the pandemic. The demand pieces were remote work, stimulus, fiscal stimulus from the government, whether it's PPP loans or people just getting checks, and ultra low, record century low interest rates. Those were the three pieces. Two of those are gone, the fiscal stimulus checks from the government and the record low interest rates. The one that remains is remote work. That is on dicey footing now. We just saw Amazon say they're calling all their workers back to office, and a bunch of other CEOs are now talking about following suit. You have to understand the makeup of some of these neighborhoods. These neighborhoods are an hour and 15 minutes to downtown Dallas. They were small, middle-class farm towns in 2018. Entire streets were bought by remote Facebook workers from San Francisco. They paid $1 million for these homes that had used to be $550,000. Who is going to buy them if remote work gets called back into the office? Who is going to buy them when we no longer have those ultra low interest rates? We no longer have that fiscal stimulus, and there's no impetus to live this far away from the city because the jobs are going away. And even if remote work stays, unemployment's rising. So again, we're losing demand. We're losing buyers. And so, and we've been building. Like there's supply and demand imbalance has swung completely the other way. We've overbuilt some of these areas.
Do you see people that migrated domestically leaving? Are you seeing any type of exodus as far as the ones that have relocated from California or have come from other areas? Are they saying, because you guys have some seriously high property taxes here.
We do.
And the tolls, you talk about driving. I mean, you could spend $500-$700 a month in tolls. They jack them up at peak times, drive times. I mean, they tolls change. So you're seeing people leaving now?
Yes. I think one of the biggest sort of rug pulls that a lot of people moving here remotely got was how expensive, sort of unexpectedly expensive, the Dallas region is when it comes to your energy bills, when it comes to your tolls. People think, oh, it's all fine because it's offset by no state income tax. That is one thing when you're buying a $500,000 home that has, even that has, roughly $1,000 a month property taxes. When that's $1 million home, that's almost $2,000 a month of property tax and insurance payment. That's a rent payment for not even the mortgage portion of your pity. So there are people who moved here, and I think were sort of blindsided by some of these costs that they just didn't see. If you got a pool, $300 or $400 a month water bill. Road construction everywhere. A lot of people were frustrated by the road construction, did not expect the amount of traffic that has grown here in the last 5 years. The interesting thing is these people are not moving back to California, New York, or Chicago. They're moving to even cheaper areas. So we saw an exodus to places like North Carolina, Tennessee, other regions of the country, Virginia. Basically, it's people that came here for low cost of living, realized it wasn't all it cracked up to be, going somewhere else where they think they might get even lower cost of living.
I want to talk about corporate buyers. I know I've heard you on Fox. You're certainly not for all of these corporations scarfing up single-family homes. I agree with you. I think that they should have stayed in their multifamily space like they always have been, right? Some of the areas here in Texas, some of the cities, during the pandemic boom, corporate buyers bought up more than 50% of the home sales where they bought up the houses for rent communities and things like that. What's your overall opinion now that rental rates don't make sense? Do you think the ship has sailed on this, desire to buy up single family homes for rentals? Do you think we'll see a lot of this inventory added to the market?
Yeah, one of the interesting things that I've seen change since that 2020, 2021 era, where what you said is absolutely correct. I believe Tarrant County in Dallas was over 40% of homes were bought by investors, and Dallas County as well. So there was that mad grab to get these single family homes and to turn them into rentals. Since the rates were hiked, the pivot has been some of these, especially the larger companies, not like the mom and pop people, they have pivoted to build to rent. That's sort of like, I kind of think of that as like a branch between multifamily and single family, because they are producing housing supply. Like they're developing, they're building properties. They're designed to be rental properties. So the only negative I would say that there is that it's just diverting development and building resources away from building single family homes for people to buy. But it is building housing units, and it is, I think, better for society and for neighborhoods to do it that way rather than to come in and buy these homes and just, a lot of them just kind of languish in these nice neighborhoods because the landlord's absent. They don't live in the state. If they don't find a tenant, they just sort of sit on it because they're like, well, it went up in price, so it's kind of just like a stock. I'll just leave it sitting there. And then they don't take care of the yard, and it's not good for the neighborhoods to have a ton of rentals, which is why the HOAs cap them.
Yeah, I guess I could look at it in two different ways. From a building background, you are taking allocated lots or land allocated to development, and maybe it's different here in Texas, but I know in Maryland we're very restrictive on building communities, especially the major subdivisions. You could find little pockets of minor subdivisions, but 3 lots or less. But as we get into the big communities like I see here, flying in and driving around, I mean, you have subdivisions with thousands of homes, not hundreds of homes. They're massive. Do you think that investors should be restricted at all to the amount of homes that they could buy for rent?
I think we need to start regulating the bigger player investors, because they have just an unfair competitive advantage based on their ability to access capital for cheaper. And they basically also have an ability to sort of take losses on certain properties and just hold out for longer than, a mom and pop or a smaller guy. And because they're able to do that, they can sort of get a chokehold in certain markets. And I did see this here in this particular region in those boom years where Open Door would come in and buy 6 homes in a neighborhood. They were setting the comps. They would say, we're going to offer 10% over list. That was the new. Now, all those other homes that they bought the month prior were worth that. And it was sort of like they were running their own little like shell game of manipulating an entire neighborhood's worth of prices. And it's very difficult to compete with people that have raised VC money to purchase homes, especially if you're just a normal family and you're getting a regular mortgage and you have saved up your down payment for years. You can't compete with somebody that has that level of resources.
Especially when they tell them they can live there for free for as long as they want. Just about, you know what I mean? Just sell us your home, just turn it over to us, and
we'll rent
if you need to be there another 3 or 4 months to move, no problem. We'll let you stay for free. I mean, how can a home buyer whose lease is expiring or who's selling another house that someone needs to move into possibly make that happen? Are they going to go into a hotel? Maybe a short-term rental. Let's talk about that. I know you love those. So, what's going on with the short-term rental market? I mean, do you think this is an area that Airbnb, I think they make billions of dollars a year. They're making all the money. The costs are going up for everyone that went into the business. Neighborhoods are shutting them down. Townships and counties are making it illegal to have them. What will that do to home, inventory? I mean, from a supply standpoint, do you think we're going to see a wave come?
We have seen a wave of new listings. If you look at specifically the Airbnb heavy regions, like parts of Florida, Austin was a huge area. Those actually are the regions right now that have the most inventory of housing for sale. And I think a lot of those were former failed Airbnbs. Not because I think Airbnb is a terrible business model. I think if you have really good homes and you have good amenities and you can compete with a hotel, then people are always going to want them. There is a market for them. There's not a market for like the gold rush sort of Airbnbs everywhere that happened during that pandemic era. And again, that was just speculation. That was speculation on a post-pandemic travel boom that did materialize and is now receding and, waning away because, like I said, the economy is weakening, people are losing their jobs. You're not taking 3 vacations a year. You're taking, maybe one small local one.
In 2006, right before the bust, the Airbnb market, or just say short-term rental, because they're not the only brand that markets short-term rentals. What I noticed, and believe me, I had no idea. As a builder going through the GFC, prior to the GFC, I never once woke up in the morning and said, oh, this is all going to hit the fan. And we were just living the dream, And things were selling. I have to tell you, there were negotiations happening on hoods of cars, just like we watched, not as much or not as high profits as some have realized recently, but it was still going on. I mean, people barging in the door to your spec home saying, can I put an offer in? And we're like, get out, like you can't even come in here yet. We're not finished. But it reminds me, the Airbnb rush or short-term rental rush reminds me a lot of when my neighbors thought it was a good idea in 2004, 5, and 6 to get into real estate investing. These are the people, Amy, that have the most resources and money. Buying an Airbnb and putting $35,000 or $40,000 or $50,000 in furniture is not cheap. You're not financing that. You were paying for that. So a lot of these people that bought these second homes have money. How long before these, lack of profits and rising ownership costs make smart money say enough?
It's interesting because, yes, some of them, especially people who these are second homes, they have money. They can hold that sucker as long as they want. But when you're in this speculative sort of gold rush mentality, these are people who are 24 years old on TikTok that watched a course on how to become an Airbnb owner. They don't have money. They have debt. They have enormous amounts.
So you see, they financed the furniture.
They financed everything. They massively took on debt to get the property based on a DSCR loan, which is your revenue, projected revenue is what's giving you the basis for the loan, not your income. Not you need a certain amount of down payment, but you can buy a home without without proof of income or any of that. You just need to show this is what the business is going to return me in revenue. Well, what happens if your property's in Florida and there's hurricanes everywhere and people don't want a vacation there? What happens if suddenly there's 30 other similar Airbnbs in your region and nobody likes yours? You're cash flow negative. How long are you going to be cash flow negative? And we've seen a lot of sort of what I call behind the scenes bailouts over the last year, where somebody who operates 50 Airbnbs will come in and find this small guy that owns 3 and say, I'll take these struggling ones off your hands and just sort of merge them into my portfolio. Wow. So that's sort of part of the reason why we haven't seen just massive MLS listings of homes for sale to, for families to live in. A lot of these are off-market deals where it's one investor guy to another, like sells to like. So like you said, it may be a handshake deal or a car, some in the back of somebody's car say, hey, you want to take these Airbnbs off my hands? I got to get out of this market. It's not making me money anymore.
And I think what you just talked about is happening at massive scale with subject to investors, wholesalers. I mean, they're mailing postcards and you're not seeing this inventory hit the market. I think you're right. You talk about these speculative borrowers where one of the probably, the fuel to the fire along this, I'll say, pandemic boom is really something that's been happening since the 1980s is the backing of these banks and financial institutions to lend money. And people want to say that what's different now than the GFC was that there's been credit tightening. What you're describing is not credit tightening at all. I mean, that's speculation. So getting back to where we are now, do you think this is the Fed's fault looking at home prices where they are right now? Do you think the Federal Reserve played a part in this?
They absolutely played a part. I think there's myriad people that you can blame for, where we got to be today with housing. But certainly, I think quantitative easing and it's kind of been like a big monetary experiment that we started in 2000 with Greenspan. That's really the era where you see home prices have gone parabolic. And that also sort of paved the way, I think, for us to have the setup for 2020 inflationary crisis. It's very difficult to make a case that, home prices would be going down when we were continuing to lower the borrowing costs for 20 years straight. That's what zero interest rate policy did. You could get a monthly payment on a home for less money because they kept lowering the cost of borrowing. And yes, they restricted the standards for banks after 2008. The Federal Reserve came down hard on the banks, said, you need stricter lending standards. You can't do all these practices that you did during the great financial crisis. Those were real things that were put into place. The problem, Todd, is that the private market is a player in the current cycle. These are private mortgage lenders that are giving these loans, these DSCR loans. These are like companies that honestly didn't exist. Some of these companies started in 2018, 2019 that offer these mortgage loan products. A lot of them are in turmoil right now. They've been laying off staff since 2022. Nobody really knows what's going on. They've had these bizarre shutdown of tech things like the Mr. Cooper incident. Like there's weird stuff going on in the private mortgage market. And I think all of the bad loans that are out there, which is not the majority, because like you said, the majority have been corrected of normal residential family homes have been corrected after the great financial crisis. But the regions that have this concentration of these private loans, that's where all the risk is lurking because nobody really knows how these things were underwritten. Nobody's closely regulating it. And nobody knows how bad these private company financial statements look right now. I mean, they might be sort of just hang on and pray for lower rates, but they're struggling under the surface. We just don't know.
Yeah, they will probably not be bailed out if I had to guess. I think when we look at the Fed put, and like you said, with Greenspan coming after Volcker, and they learned to do a lot of very interesting things with the economy, the manipulation. Meanwhile, the debt is just growing out of control. But what is your opinion? Getting back to the GFC, they went to the banks and said, look, you can't give these no-doc loans, these liar loans. You can't, you can't do that anymore. But what do you think about then in 2011, 2012, the Fed getting into buying mortgage-backed securities and then the government taking over Fannie Mae and Freddie Mac and becoming the new subprime lender, essentially, and lightening credit standards. So they took the shift from, because maybe they realized, oh my gosh, now we've got a problem here. No one can buy houses. We just sold off all of this to Wall Street. And now we're in a situation where if we don't start buying mortgages again, these people aren't going to ever own homes. And we don't have a reverse gear here. What do you think about that? I mean, should the Fed be in manipulating markets? If you think about what Paul Volcker did, he was criticized, but he took high inflation and, man, he leveled it. We went through a period of time. And prior to that, if you look back over the last couple of 100 years, every 2 or 3 years, we had a market correction. Things would get out of balance. They would correct themselves. Prices would go up. You could look at a loaf of bread. It was stabilized for decades. The Fed wasn't really, their role was not to get into these markets. How do we go back from that now that any kind of reversal in pricing would be complete just devastation? How do we find affordability again?
I don't think people are going to like this answer, but I don't think you can go back. The reason why is because what they did during 2008 was, I think the action in and of itself was warranted. They needed to do something to stop the complete bottom from falling out. Because like you said, housing's a huge percentage of GDP. We were on the verge of really a global depression if we didn't step in and take some action. And I feel the exact same way about the pandemic. They needed to do something. They didn't need to do everything and do as much as they did. And I don't have a problem with the fact that they came in and they made some bailout actions in both of those instances. The problem I have is that they continued to do it after the economy had stabilized. They originally, when Bernanke came out, he said, this is a temporary measure. We're going to get through this crisis, and then we're going to start selling off those MBS off our balance sheet. This was never supposed to be something that just accumulated over time. But that's not what they did. And it was I felt the same way about the pandemic. There was a global pandemic. 20% of the country was unemployed. People needed help. But why did they hold interest rates at century lows for a year while inflation ripped double their target? That they overacted in both times. And that is what's caused a lot of pain in the economy and in prices.
Do you think the Fed's in a trap now? I mean, if they drop interest rates, so we're just coming off a higher for longer. I've interviewed numerous economists. Some of them say that Powell did an okay job, or Powell and company. Others say that he should wear a dunce cap. When you look at it, you say, it's common sense for you and me to sit here and say, why didn't we raise interest rates a year before? But when you look at the backside of it and say, okay, well, this was really good for the stock market, right? This is really good for a small percentage of investors. Not the general populace, but a small percentage of investors. The question is, does the Fed work for Wall Street? Does Wall Street work for the Fed? But if we drop interest rates, it's going to hurt consumers. And if we raise interest rates or keep them higher for longer, it's going to hurt businesses. It's going to hurt Wall Street. It's going to show up. Earnings reports are going to go down. Consumers are going to, the prices. What is the Fed stuck?
You have to remember the Fed is Wall Street. I mean, Powell's a former investment banker. Most of these guys were bankers.
He's not an economist. I think he's the last non-economist was a disaster. Powell is not an economist. He's an attorney, very wealthy one.
Yeah, I think the Fed is trapped in the sense that some of the inflation that we have right now is embedded. It's sticky. And they only have one tool, and it's very blunt. It's just monetary policy. They can tweak interest rates. What we've discovered over the last couple of years is that there's actually certain sectors of the economy that have had inflation are incredibly resilient against the rate hikes. The rate hikes were not effective in lowering inflation across the board. It lowered it in certain areas enough that we could pull that CPI down to like a sort of respectable level. And a lot of that honestly was kind of like parlor tricks, like draining our strategic oil reserves. Well, guess what? But a big part of the deflation in CPI was the cost of gas because we did that. And meanwhile, things like housing, food, insurance, all that stuff has been ripping to the upside. And so my concern is if we have another spike in energy costs, inflation's going to come, the CPI inflation number is going to come roaring back. But, from the Fed's perspective, they're in a tough spot because Washington is gridlocked. We've got a super partisan, divisive politics right now. Nobody wants to do their job and do what needs to be done with our debt levels, which is to cut spending, raise taxes, get rid of entitlements. Those are not popular politically. So they're sort of dumping all of their work, their job on the Federal Reserve, to the point where even, President Trump, when he was in office, was complaining about Powell and telling Powell, I need low rates for my economy to be functioning. This is a democratically elected, most powerful man in the world. And he's going to some other man. He's like, I need you to do this for me, buddy, like, so that I can have a good economy. And then in this past cycle, we've had, like Senator Warren and some of the other senators, so it's not partisan because this is happening on both sides, writing letters to the Fed right before this last cut saying we actually need 75 basis point cut. And I'm sitting here thinking, we elected you people to use regulations, to pass laws, to change the business code so our economy would function well. And instead, all you guys are all doing is going to the central bank, who's become far more powerful than I think they ever were supposed to be. And that's where we're getting policy resolved. So the end result is an inflation tax. It's an inflation tax because it's the least divisive way to tax a country without them knowing about it.
You just hit the nail right on the head. Yeah, that's, I think it's indisputable. And the other thing is, I personally think this gridlock is going to continue for many years because no matter who the president is, I believe that they're going to have a hard time getting any kind of policy passed because of this divide. And meanwhile, the debt is growing at an unbelievable pace. The economy, do you see that? Two other areas I really want to dive in, and I want to talk about new construction and some solutions to affordable housing. Not that there may be any. I have my own take on it. I think we're at the end of the road myself. I think that you can only manipulate a market for so long before it's almost like telling lies, because what happens is everybody, they say the truth will set you free, right? You start to tell a lie and this web starts to get entangled. And then all of a sudden you get to a point where you're like, what did we just do? Like we can't go that way. We can't go this way. We're stuck, right? But meanwhile, you could tell people that it's not raining outside and they step outside and they get soaking wet, but you can only tell them it's not raining for so long. And they're like, you're lying. It's raining. I'm wet. I'm soaking wet. So what's happening unless we have in my opinion, an ultimate bailout or stimulus package, their credit card debts are through the roof, paying $1,000, $1,400 for a car for 6 years. It's depreciating and breaking down, and all of these things, homeownership costs are out of control. What is your opinion on, and I know you deal with here the big brands, the national brand builders, ones that can come in. I know the cost of building a community, even a minor subdivision, the regulations, the soft costs make it hard to make any money. What do you think is, if we look at housing as a supply and demand, and we know the existing home community is what it is, right? Existing homes are existing homes. In order to put a new supply in the market, we need new construction. What is your opinion on green energy, the restrictions that are put on builders? You think some of that needs to get cut like they did after World War II to encourage more builders and developers to build more houses? You think the government's controlling things by restricting making the cost so prohibitive to even build an affordable house?
I think there's only upside to building more housing. And we do have too much regulations and red tape that make it difficult. And there's certain regions of the country where there's just not land, like California, the coast. So there's other problems there. But in areas of the country where we have ample land, there is still too much restriction. And we've got a lot of just labor problems because the labor market's just sort of coming back into equilibrium after this massive shortage during the pandemic. And the cost of everything is so much higher because of the inflation. So your laborers cost more, your materials cost more. What I've seen happen is we are building lower quality homes now. These are builder grade, cheap finishes. I'm sure there's videos on your channel of some of these inspections. This stuff would not pass, have never passed an inspection, 20, 30 years ago. This is the way that we're having to build in order to get new housing out there. But it's going to continue to be a problem to get supply. And in the meantime, we have these new use cases for housing that didn't exist 10 years ago. Airbnb was founded in 2008, so in the wake of the great financial crisis. Now we have millions of homes throughout the country being used as motels and priced. Their valuation is now priced as how much money can this earn me as a hotel. And we have homes being used like peer space. People are renting out their home by the hour. So, influencers can come film a rap video there. Well, again, if you get enough people to do that, you can pay a pretty expensive mortgage. And then that home is going to thus be priced based on that business use case, not based on what homes were always historically priced on, which is median area incomes. And there's an additional piece too of a wealth factor that we talked about before with the cash offers. Because there is such a wealth gap in our country now, there's the ability for people to skew home prices well beyond the median area incomes because people are buying homes with stock options. Wealthy parents are giving their kids $200,000 down payments so they don't have to take out a giant mortgage. And those sort of new support pieces are coming into the market to keep that existing supply tied up. So I don't see us, I continue to see a struggle for housing for this decade in terms of there's going to be, in most of the country, tight supply. Obviously, we've seen some regions like the Sun Belt where inventory is the highest it's been in 10 years because we have been building. But I don't believe interest rates are going to come down enough to be highly stimulatory. And I also think that builders are going to struggle with these kind of higher than we're used to new Fed fund rates. So it's going to be a challenge going forward. And I actually think 2025 is going to be a pretty tough year. A lot of people, I think, are going to get blindsided because they're expecting low rates are going to be this white horse savior for the housing market. And I think they're going to find that rates only come down a little bit and it's not going to save anything.
Yeah, it's only, like I said, builders have been offering historically lower mortgage rates at 5.5%. I think 7.77% is the running 50-year average. When you look at, you have to incentivize if you don't reduce the cost of development for these builders with the, like you said, the high home cost of material costs and things like that, which would result in deflation. We would have to have massive deflation, which we know is no reverse gear. So there has to be some type of mandate for development that encourages a builder to build a 1,200 or 1,400 square foot house. Because, like you said, the materials are so expensive that if I'm building a 12 by 14 living room, if the system is built around me getting an appraisal and it's based on square footage of X amount of dollars a square foot, I can easily expand at a very practical cost the living room by another 10 feet, by 10 feet, and build a bigger house because my costs don't go up that much. The cost is in my development cost, another couple sheets of drywall, a little bit of insulation, another outlet device. You have still the same amount of switches. So there has to be incentive. What do you think about the tiny home conversations that are happening right now?
I'm not a fan of the tiny home, models that I've seen in Texas. I know there's sort of been some ones have gone viral with the pictures of them in San Antonio and whatnot. That said, they are selling. Those homes are selling. They are affordable. A lot of them are less than $200,000. To me, they look like double wide trailers stacked on top of one another in very narrow lots, no yard, aesthetically very unattractive, not enough windows or natural light. But that is a way that they've been able to build a lot of housing units for cheap. I think, like you said, one of the problems that we've seen since the pandemic is that builders are focusing their resources on luxury. Almost all of the multifamily that's been developed in this area in the last 4 years is Class A luxury. And almost all of the home builders that are faring well...
Luxury junk, by the way.
Yeah. Yeah.
Right.
It
looks nice.
It looks nice.
Right.
It has nice finishes.
Right. Yeah.
And it's the same with home builders. Like Toll Brothers is outperforming dramatically because some of these builders that have custom homes and they have, $1 million homes, Well, their buyers are the ones doing well in this economy.
Yeah, I have to say, Toll Brothers builds a decent track house. I mean, out of all the ones that, I mean, I historically speaking, and I don't usually give, credit to these national brand home builders, but I do see that they're a little more conscientious about the product. It is amazing. I'm glad you said that because I call them, I've caught a lot of flack on my channel. I actually had, I've had a couple videos on tiny homes, and I just interviewed, or I was just on somebody's channel, and she's all about the tiny homes. Christina Smallhorn is her name. Her audience didn't like me very much. I can tell you that. We definitely have different audiences, but that's okay. I have very broad shoulders and thick skin. But I don't think the solution to America's housing crisis is to approve a shed community. This is their idea, their concept, to take homeless people off the street and put them in tiny home communities. There's one not far from here in Fort Worth that I've seen in the news, where they're trying to get it, now they're trying to, maybe it's already been approved. I don't know. Maybe you know about it more. They were trying to get more density and for elderly people, a tiny home. I mean, if you see some of these tiny homes, you have to like unpack your furniture, put it away, slide this out, slide that out. I mean, talk about mental health issues. Living in a tiny home with a family, it just sounds like a nightmare to me. You agree it shouldn't be our solution?
My concern with the tiny home movement and the ones that I've seen constructed, the communities that I've seen built, is, to me, for the first time in American history, what I'm seeing on large scale is we are regressing in the quality of builds that we are doing. All throughout history, we used to be innovative. We built better things, better architecture, better products, better construction. And there's been a shift. I would tie that shift in with about the time we started making money cheap in the early 2000s, that QE boom. We started building lower quality, mass-produced products. Right around the same time, we started importing everything from China. That was also lower quality, mass-produced, fast fashion. All of this stuff coincided at the same time. But to me, it represents a downgrade in America when the new and innovative things that we're presenting to people are lower quality than what their parents or their grandparents have. And just because you put a granite countertop in it does not mean it's a higher quality thing. We're doing these surface finishes to sort of gloss over with really shoddy construction.
Junk cabinets and nice countertop.
Yeah, tiny lot. It's going to be aesthetically a very unattractive. There was no thought put into the layout of the neighborhood. There was no architectural integrity in some of the way that they planned out these communities. It's literally just, I want to get maximum homes on minimum wattage so that I can get as many homes as possible and make a lot of money. And I think the distinction is that home builders used to serve customers. Now they serve shareholders.
Yeah, that's the truth. Yeah, I mean, I think that's what business in America is all about too. I mean, as somebody that came out of high school and went into construction, I've had a great career. I mean, I've loved my career, and we're not teaching people how to make things anymore. There's no pride in building something anymore. Our younger generation doesn't want to do the work. Which is why we have so much migrant workers doing the work, which is, in itself, I mean, hey, look, I've worked with these migrant workers for many, many years, and they work hard. They'll do the work. We've had a big shift, Amy, in you just kind of led this right into this segue. I wasn't going to talk about it, but I did hear you mention about real estate agents and the change of NAR. The National Association of Realtors that came, has really developed and changed our rules a little bit, not so much in Maryland, but for a lot of the country with the way that agents are conducting their business as it pertains to commissions. A lot of people, we take a lot of heat on and scrutiny on being responsible for the home prices. And I don't think that we can completely deny the fact that agents being commissioned in nature, they earn what they sell based on what they sell. There wasn't a whole lot of agents taming exuberance from the waiting buyer or the eager buyer, right? It was just go, 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 go. Let's buy it. You had said that it's something very interesting that I never heard anyone say. You had said, and correct me if I'm wrong, that if we had a lack of agents, which again, the first time all I hear is people saying, get rid of agents, they're no good. But you said that you were concerned about the lack of having a real estate agent would open the door for corporations even more to buy real estate. Was that what you said? Did I hear that right? Yeah. So Can you kind of explain your thoughts on that?
Yes, I believe that real estate agents are valuable, and a lot of people think I'm a real estate agent because I tend to go a little bit on the offensive for good agents, but I'm not. I've never had a real estate license. Real estate agents are neighborhood people. They serve families. They help you find a home. They sort of walk you through the process. Historically, they've sort of been an advocate and a teacher on top of just being a salesperson. The way our country wants to go is more AI, technology-based. Eliminate that person. What do you think people are going to get instead? They're going to get sort of like some automated chatbot on Redfin, not going to be helpful, not going to give them a lot of information. And ultimately, what it's going to do is it's going to make it easier for homes to be bought at scale. And who buys homes at scale? Not families, institutions. Institutions buy at scale. So eliminating that personal component, that neighborhood person, relationship, real human being component, taking that out moves us one step closer to just fully automated technology. Now, there's some people who really applaud this, like even regular family home buyers are like, that's great. I don't have to pay anybody commission. I can go find a house on Zillow myself, show up at the open house. Why do I need to do that? And that's very short-term thinking. Yes, that might work in your favor in the short term. In the long term, that might come back to bite you, because what you're going to see is way more buying at scale from these bigger institutions. And you may, in retrospect, wish that we could go back to sort of like the small town, old-fashioned way.
Hearing you say that is very interesting because, as somebody that gets very frustrated with the lack of human interaction, I can see sellers saying, you know what, screw it. I'm so frustrated. I don't want these. I'm trying to court these people to come and check out my house and negotiate with them. And, it's like buying something on Facebook Marketplace or selling something on Facebook Marketplace. All you hear is this still available? Is this still available? And you reply to them and they never respond, or they say they're coming and they never do. I see this whole world of bots attacking all of these sellers, right? Is this house still available? Can I come and see it? And then rearranging their whole life, trying to accommodate a buyer to walk through the door that never shows up, or who maybe is just a criminal coming to rob them, when open up a window and come back when they're, who knows, right? We see it in the real estate industry, but I never heard anybody say it. And that really is a very interesting point, because I can see that as we move towards that, two things you said, as we move towards that, I think that frustrated sellers will just be more open to just buy with the iBuyer. Oh my gosh, I'm just going to take his offer or take their offer because they're real. I can stay here. I can sell out. It may not be as much. Maybe I'm making $20,000 less, $10,000 less, but the hassle's not worth it for me, or I'm afraid that the market's declining or whatever. So that's a good point. But the other thing you said was that the government wants to push towards this AI. And it's interesting because out of all of this and watching the DOJ that's been attacking the National Association of Realtors, and I'm not advocating for NAR. I'm not. I've had my own opinions about this whole hierarchy. But it's very interesting that they don't want to take responsibility for asset prices, but they will blame the real estate industry for it.
So, there's one other piece to the whole concept of kind of phasing real estate agents out and blaming them, making them the scapegoat for high home prices, is in the coming decade, there's going to be a massive wave of homes that change hands via the boomer generation who holds the majority of America's real estate beginning to pass away. Their children, in many cases, are going to inherit properties. What do you think these kids are going to do that are 40, 50 years old, peak of raising their own families, busy, stressed? They're going to go to the iBuyer. They're going to be like, let's get this deal done as quickly as possible. I want this thing off my hands. I need the money. They're going to be likely to sell in droves to those Redfin type, easy sale, cash offer type of situations. No inspections. Give me my money. Make it easy. Close fast. So that's a scary thing to think about, because a lot of people have this false idea that these millennial kids are just going to inherit these homes and they're all going to live in them. Historically, there's no base cases for that. What actually happens is, in the majority of instances, it's multiple children. They don't want to bother with it making a rental, so they will sell the property. And in a lot of cases, they're grieving the death of a parent. They're planning a funeral. They've got young kids. They want to get it off their hands. And I'm afraid that the great wealth transfer that everybody talks about is not going to be boomer to millennial. Millennials are going to be the intermediary. It's going to be boomer. Millennial is a brief holding, for a little bit of period of time, to institution. And that's going to be the end owner, is the institutions are going to get that boomer wealth, not the kids.
I see that 100% when just thinking when you're talking about this. In most of the best deals that I've ever purchased in real estate, houses, the best deals were always estate sales. 100% always estate sales. And you're so on target. What happens, like you said, who's going to take over the house? Nobody wants the expense of it. They're not going to repair things. They're not going to bring it up to where a buyer will walk in when we don't have the exuberance that we've had in the last 4 years, which is now. And they're going to want things fixed. And they're going to say, this is outdated. That's outdated. I want this fixed. And they're like, forget it. We're not fixing anything. And when you spread $20,000 or $30,000 over 4 kids or 3 kids, and one lives in California, one lives in Texas, one lives in New Jersey, they're like, just sell the house, man. I mean, you take 40 grand, like, I just want my money. I just want the money now. I don't want to wait or do all this stuff to get it. You're hit the nail right on the head.
Yeah, there tends to be this sort of false idea circulating around that boomers are these super lucky, rich generation. And in a lot of ways, monetary policy has served their generation very well. But not all boomers are sitting on $1 million home. A lot of these people have homes that are, worth $300,000 or $400,000, $500,000 in the Midwest and in, normal regions of the country, not the expensive metros. And these are homes that have 1980 kitchens. The maintenance hasn't been done. The yard hasn't been kept up. And as they get older, those things deteriorate even more. The people who want to buy those are not young families with a real estate agent. The people who want to buy those are institutions who are like, oh, this is going to take a lot of cash to fix, but we have the money to flip it. Yep. So we'll take it. The kids are like, great, we found somebody to take this off our hands. We don't have to deal with any of the repairs. Yeah,
or worse yet, we'll just rent it. We won't fix anything, so it doesn't help the local economy at all because a renter doesn't care about those 30-year-old cabinets.
Yep, yeah, or they'll turn it into a rental. So I think that those are the more high odds outcomes for some of these boomer homes than just them going to their kids. Their kids aren't going to live in them. I mean, what kid's going to live in mom and dad's like 1980s? No, sentimental value is not as compelling of a factor as people think, and certainly not when there's 3 adult kids that we're going to be fighting over the property. They're going to cash it out, and they're going to cash it out to a at-scale buyer, I think.
Amy, look, I appreciate everything today. Your knowledge is fantastic, and I look forward to us. Again, thank you so much for sitting down with me and having this conversation. But I look forward to having this open dialogue and as things change, having you back on the show if you're willing to. And thank you.
You're welcome. It was good to meet you, and I'm glad that you were able to come out here, and I appreciate you working with my schedule. I'm a busy mom, so.
Yeah. Well, we'll talk to you soon.
Okay.
Hope you enjoyed Amy Nixon. You can let us know by hitting that thumbs up. And if you haven't already subscribed to Sachs Realty, please consider doing so now. You can also follow us on your favorite social media and audio platform. I enjoy reading your comments and questions. Drop them below. And one of the biggest compliments that you can do for me is to share this video on our channel with your family and friends. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.